Hi, Jonathan York, Bay Financial Partners, look at the investment market. A little bit of stronger data coming out of the US in terms of the GDP numbers. First read there was 2.4 versus an expected 2%. So that still shows that the US economy is still pushing on at a pretty reasonable rate, and obviously it's still a pretty tight jobs market out there as well. But then on the positive side, the inflation data came out at 4.1. That's the lowest read since September 2021. And also as well, the PCE, which is the Fed sort of preferred inflation measure, that's falling as well, and certainly showing sort of reasonable signs that it's heading in the right direction. So that gave the market a little bit of a push towards the month end, and certainly July was a pretty reasonable month for US equities. Interesting as well, some of the big investment houses are starting to revise upwards their year-end targets for US indices. Though interesting though, US interest rates are starting to nudge up a little bit. The 2-year is now 4.92, and the 10-year is now above 4%, 4.03. Now, obviously, the Fed has come out and sort of said that it's going to be looking at data now, and that will be data dependent on whether you see any further moves in interest rates. Most people tend to feel the Fed is done, but there are still some out there who feel that maybe another 25 basis points is on the cards in the next sort of couple of months. But if there was a further rate increase and with inflation falling, that might just be a tough sort of hike for the Fed to spin. The proceedings against ex-President Trump are sort of starting to sort of ramp up again, and potentially there could be some further charges out there as well. But it doesn't seem to be having much impact on the sort of polls. He's still the clear front runner for the Republican nomination. Although interestingly, in terms of sort of fundraising, the sort of big mega donors out there seem to be shying away from ex-President Trump. Now, oil had a pretty strong month in July. That's now cracked the $80 a barrel. That's currently around 81.50 and change. Oil was up around 15% in July. Now, that obviously does pose some sort of inflationary pressures out there for the global economy. In the UK, relatively sort of quiet on the data front. Certainly hoping that the sort of summer months and the tourists do actually sort of spend and put a little bit of money into the UK economy. That'll help sort of pushing along. But obviously the big news in the UK is sort of the falling inflation picture. And obviously the Bank of England governor will hope that that trend continues. Now in Europe, the ECB did hike rates by 25 basis points, taking the official rate to 3.75. That's the highest level since 2001. But again, the EU economies are sort of defying gravity really, and managed to sort of eke out a small gain for the 3 months to July, increasing by 0.3%. So again, not a huge increase, but it does show that things are heading in the right direction. You know, potentially that sort of EU economy can sort of manage to sort of stagger along and then start to gain a little bit of momentum going into year end. Again, quite interesting in Australia. Many people felt that Reserve Bank might just look at increasing interest rates again by 25 basis points. But indeed, they did leave them on hold at 4.1% for the cash rate there. That's the second month now they left rates on hold. And again, that maybe gives a little bit of a sort of a clearer indication into their thinking that with inflation coming down in Australia, potentially they've done enough already. Because it will certainly give the Australian economy a bit of a boost, and indeed house prices are starting to sort of benefit out there as well and show signs of sort of recovery. Now here in New Zealand, the latest ANZ business confidence, while still a negative number at negative 13, was slightly up from the previous reading of negative 18. So again, a little bit of a brighter outlook out there, but still pretty sort of pessimistic. Though interestingly, the sort of readings on inflation there was down again slightly, coming in at sort of 5.14 versus 5.29 on the previous reading. So businesses may be sort of feeling slightly better and potentially that the worst is over. That could also be said about the housing market as well. Latest data coming out from CoreLogic actually show that Wellington house prices are actually increasing slightly. Now, that's the first time for quite a while. And again, certainly housing activity is starting to pick up now, in many of the regions. Now, obviously, the Reserve Bank meets again and on the 16th of August, and it'll just be interesting to see the more really the commentary that comes out there, because they've already come out and said the rates are where they need to be at 5.5 on the OCR. They don't anticipate any further rate hikes. And with inflation falling as well, you'd expect them to sort of keep rates on hold. And certainly there are some signs out there in the economy that things are starting to pick up. Certainly wine producers, despite being hammered by the poor weather from the sort of storms, are starting to show some pretty reasonable demand out there. And probably the issue could just be that there might not be enough supply. Now, obviously, the clock is ticking down towards the election, and still the government seems to be sort of struggling out there to gain any sort of momentum. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.